I remember when I used to think that trading is all about taking trades every single day. But the reality is, the fact that I was taking more trades, I was losing more money. And in this video, I am going to show you the exact process that I followed to cut down the number of trades that I took, which has increased the amount of money that I make, plus has reduced all the stress, and everything now is smooth sailing. If you are new to the channel, subscribe. Let's jump into the video. Alright, number one is mindset. So when you come to the screen, how do you approach the market? Do you come to the screen hoping to make money, or do you come to the screen just hoping to lose money? Because I remember there was a period in my life when I was losing consistently, oh my god. And maybe you are in that situation right now. So what exactly do you do? So what I have realized is the power of expectations. I don't expect to win, but I also don't expect to lose. I have no expectations of the market. I just come to the screen and I apply my edge. Now, next thing is the strategy, which we'll talk about now. So, I used to trade 3 to 4 times a day. Imagine 3 to 4 times a day. Maybe you are in that stage right now, and you find that you are not making money and you are taking all these trades. That is because I used to think like a guy working a 9-to-5 job, where if I did not take a trade, I felt like I did not work that day. So how did I shift my strategy to cut down the trades, which you can do right now? So first things first, number one is understanding your edge. So my edge is what we call a failed breakout. Now, a failed breakout is when price on Monday sets the high and the low of the week. Now, I am not looking to trade on Monday yet. I am waiting for that high to be formed. And then on Tuesday, if price breaks out and closes back inside of the range, now I have a failed breakout. And if you can look at it from a daily candle perspective, it looks like this. We have a candle, and then the next candle breaks to the downside, but then closes back inside of the range, giving you a simple structure that looks like this, which now gives you a very high probability of price going in this direction. It's as simple as that. This is my edge. Now, if you understand where the market is headed, then finding the entry is usually the headache. And I'm sure I've been receiving all these questions. Where do we get in? Which time frame do we use? Like, bro, sis, chill, relax. I'll show you. So, we have the failed breakout. Now, let's first look at a real example of what a failed breakout looks like in real life. If you are finding value in this content, then like the video because it helps with the algorithm. And if you'd like to join our one-on-one mentorship, then link will be in the description. So if we look at USD/JPY, we have Monday setting the low and the high of the week. We have Tuesday breaking out, closing back inside of the range, giving us a failed breakout, which is a reversal signal for Wednesday. So we were looking for buys on Wednesday, and you see we got a beautiful uptrend. Then on Wednesday, price broke out, closed above the range. So that's a breakout, not for us. And then on Friday, on Thursday, price broke out, closed back inside of the range, giving us a failed breakout. And a failed breakout is a reversal signal if it's at the high. So on Friday, we were looking to sell. And on Friday, price did not give us the sell that we were looking for. And price stayed inside of the high and the low, which means that we continue selling even on Monday. So yesterday, we were looking for an opportunity to sell. Now, this is where the question comes. Where exactly do you want to sell? And this brings us to another simple scenario here. So we have something called high quality levels. And you want to define specifically where you want to see your setups taking place. So the reason why I used to take so many trades was because I was waiting for price at the high of the session. And the high of the session is usually the first hour of the market open. So I realized the stronger the level, say for example, high of the day or high of the week, that is where we have the strongest liquidity. So I decided I am only going to take trades at the high of the week. Everything that I do happens at the high of the week. Failed breakout at the high of the week. Entry, I'm looking for fast liquidity to be triggered at the high of the week. So how exactly do we do that? So step one is understanding your time. So for Asia, our timing window is between 9 and 11 p.m. New York time. For London, our timing window is between 3 and 5 a.m. New York time. And then for New York, our time is between 9 and 11 a.m. New York time. Now, let's go back and analyze the trade on USDJPY. So, we come to the screen on Monday. We already know we are looking for a sell scenario. So, we come to the screen in the New York session. So, New York session is at 9. And what we see is we have this high. Now, if you scroll back, you'll notice that this is the highest point price has reached from last week. So last week, Monday was here. This is the highest point, meaning this is also the high of the week. And it's the high of the previous week and also the high of the current week. All right, so what am I looking for? If you also look at the low of the day, we have a nice range where if price breaks out and goes in our direction, we have a nice target. You know, we like big asymmetric risk to reward ratios. All right, then what we see here again, we have this area where we have consolidation. When I say consolidation, I mean it's a level where price is bouncing off of on here once, twice, 3 times. So first, we want to see price clear liquidity at the high of the week, and then we want to see the breakout. So if price does that, then we have a very high probability of getting into this trade stop loss somewhere around there, and then we are targeting a 1 to 5. So what really happens? So price clears liquidity, and then price does not come and break above below our level. So you see, it's very easy to filter out trades that do not play out rather than chasing moves. USD card gave us the same thing, but we got an entry. So let's go back and look at what happened. So we have this high of the week set on Thursday here. Then on Friday, price breaks out, closes back inside of the range, giving us a failed breakout. Now, a failed breakout is a sell signal. So when you come to the screen in the New York session, that is at 9. This is exactly what we see. And we have this level that has already formed here. And you can see we had already predicted. We want to see first price clear liquidity at that blue box. That is the high of the week. And we see price clears liquidity, and then boom, the next candle is a breakout that closes below our level. So that is our entry, and then we have our stop loss above that candle, and then we would be targeting a 1:5. So what happens? Price just plays around and then we get stopped out. Now, point here is to show you that once you have a system that filters out exactly what you are looking for in the market, then it is very, very easy to just chill and relax and let the market do its thing. Because you'll find that with this strategy, we have 2 to 3 setups per week. And our goal is to make 2 to 3% per month, which is very easy because we have high risk to reward ratio, an average of 3R in our return. So we are not really worried about anything so far because we know our strategy works. And basically, the mindset that we come with to the charts is that we are looking for the next winner, the next winner, the next winner. Even though we will go through some losers, we are looking for those big wins because it's those big wins that will cover our losses. So basically, that is how I have stopped overtrading. And if you have reached this part of the video, then you might as well consider subscribing. And if you'd like to join our one-on-one mentorship program, check out the link in the description.